What's going on, traders? Hope everybody's having a great evening. We've got Thinkorswim back up and running now, so we'll be going over a quick analysis of the S&P, the Spider ETF here, and see what we can take away from the charts after Monday is behind us now. What we may expect over the next couple of sessions, and some areas where we may want to engage the market and manage our risk. Yeah, so let's get into some information here. First thing we are going to go over, of course, is the economic calendar for the week. We'll take a look if there's anything important that we want to pay attention to. But of course, remember that this video is for educational and entertainment purposes only. In no way should be viewed as financial advice. All right, so let's take a look at that economic calendar now. And what do we have in store for us? All right, well, Monday, we really didn't have much here. We had Fed Governor Cook speaking around 11. And Tuesday, tomorrow, we've got Waller speaking at 10 o'clock. And then we have Barr speaking in pre-market right around 9:15. So watch out for those two speakers and what they have to say. We've got Cook back on deck again, but at 5:15 in the morning. So I don't think that we'll have to worry about that too much. But we do have Fed Chair Powell speaking around 9:15 before the market opens. And we have wholesale inventories at 10, and then we have Barr speaking again at 2 o'clock, and Jefferson speaking at 4:45 when the market is closed. Thursday, though, 8:30, initial jobless claims. We will keep an eye out on that. And then at 2 o'clock, we have Powell speaking again on Thursday at the IMF. So we will watch out for his comments on a Thursday as well. But other than that, looks like we are clear. So with that out of the way, let's go into some charts here, see what we can take away from them, and what to potentially expect coming into the rest of the first half of the week. All right, so just to kind of recap here, we've had a massive, basically 4 gap up days in a row, and we've come all the way up now into this downtrend in the market. Quite surprised by the strength of that move to the upside. And if we just kind of bring everything here into a clean chart, and what can we take away from our position on the chart, as well as where we are in the trend sequence. But let me actually go back into the let me go into the weekly here, because that's what we would have been looking at if we had done this video over the weekend. All right, so things are looking, definitely a little bit more constructive from the weekly standpoint. The monthly higher low thesis so far has been playing out. But where are we now, from the weekly view, right? Well, the weekly view is still, it's getting a bit more in the neutral stance now, but we have not really created a new weekly uptrend yet. And what would we need to do for that to be created? Well, then we're going to have to see a weekly close back over these swing highs here, right? And that's going to be around the 430, we'll call it 438. 437.25. We start closing over there above that area and accepting. Okay, and then we can start talking about a weekly trend change. But as it stands right now, we are still in a weekly downtrend. We're already kind of looking at that. Daily chart, which we will come back to. But, from this view, we are still in that weekly downtrend, and until proven otherwise, we will treat it as such in getting over this area here. So, kind of getting over, right here. But, it is worth noting we do have a POC just above, sitting right at 441. 92. We can just call that 442 as it stands. But we shall see now how price starts to react as we've come into this really key area on the market. And would I want to be a new money long coming up after this rally? No, not really. So let's wait for a little bit of a pullback before we even think about potentially going long. I have to admit I am in some December puts, 415 puts. Do I think that we will get that far? No, I personally don't. I think the lows may be in for the year, but either way, I do think that a retracement is in order, and we'll go over some supporting evidence to that fact. But after we do see a little bit of retracement, it is, I'll be, looking more at the long side into the end of the year as it stands. The daily chart is looking definitely a little bit more constructive than the weekly chart. So yeah, at least from this weekly candle, what we are going to certainly be watching is that about that 50% retracement, right around 425, 424.80, anywhere in that area. You can see is the weekly high here from the 23rd. So I'm going to be keeping an eye. I'll be keeping an eye on this area. As well, and that's about 50% retracement. But we can say that the most bullish thing scenario would be holding that 25% retracement within this range, right? If we come in here and we come back, pull in here, and then we make the move through the downtrend and up into POC here on the weekly around that 440, 442 area, we can see that being a potential bullish scenario. Another potential scenario that we could see play out is instead of the 25% retracement, we come into the 50% retracement right here, and that's where we potentially see that move then to the upside. Now, of course, we don't know if we will stop here, right? But this would really set us up quite nicely for a potential inverted head and shoulders type of pattern here on the weekly time frame. If we come back down into this area, we'd have a nice inverted head and shoulders here that could potentially give us the springboard for those higher prices. So, new money longs aren't interesting, to me at this area, but that potential pullback into one of these two areas may be the nice long trade setup that we could look for into the end of the year. But as it stands, I am swinging short on the market currently. So we will see how that plays out. Not really much activity in the market today. We've had this huge move to the upside, and the market only has two modes of price delivery, right? We have range expansion and contraction. It was also Monday today, so double reason to be cautious after last week's price action and it being Monday. And today, look what we got, just sideways price action. Really not a lot going on in today's market. but we have extended a bit outside of value here on the daily chart, so that's a little bit, we wouldn't really want to see that per se. Markets like to trade within their value range. But if we go back on the 3-year, let's see, we've still got plenty of room here on the 3-year. But as far as the yearly is concerned, looking a little bit extended from that value area as it stands. But we obviously saw it stay out of value for a long time before it actually came back in. So it can stay extended from that without a doubt. All right, what else kind of happened here from the daily chart perspective, right? Now, we were talking in our last video about that retracement into this prior area of balance, and that was really what we were paying attention to as a potential upside target, right? We were looking to see if we would trade, come back in here and back test this major structure breakdown, right? We were trading in this balance zone, this range. We didn't know if it was a flag or what was going to happen, but then the bears did come in. We broke the structure. We came back, and what we said was the likely scenario if we did squeeze over the 20. Now, again, I totally did not expect that we would do it in 2 sessions or 3 sessions, of trading. And I didn't think that we would get above. But we did. And, I was really looking at that retest right here, and then I was looking to go short there at that daily lower high. But now we have created a higher high on the daily sequence. So we were already kind of talking about the daily starting to create a new uptrend, which now it certainly has, in my opinion. Now we're just back kind of in this no man's land. Is it going to end up being a double top here at these weekly, at this weekly higher, lower high? Possibly. But the main concern for me from the structural standpoint is obviously these volume imbalances here, these gaps in our market structure, and we're going to get down with that a little bit more granular here in a moment. But as it stands, this is concerning to me, and likely to see moves back into some of these gaps to repair some of this really poor structure that we had created over last week. All right, so with that being said, though, let's maybe just kind of map out. So we've got our previous balance area here that we were watching, right? Okay, and we'll put this in. That's fine. Okay, so where some areas though that we are going to be paying attention to coming into the rest of the week. Well, we already kind of had mentioned this 416 area, right? This area right here that really caused the first change in the market structure to the upside, and so this area is sitting right around, where is this? 417 thereabouts, right? Maybe 416.50, somewhere in this area here. We can just see the clear breakout after we pushed from here. But we're talking about that potentially being a little inverted head and shoulders, right? But we've almost got 2 of them. You could even make the case that the inverted head and shoulders breakout was really kind of in this area here, and this area here is what we needed to get over, right, for the daily uptrend to actually start, right? This was the higher high. Now we still haven't gotten that lower high, and that's also what is concerning to me right now in the current price action. But really, as long as we're still holding over 420, everything is a-okay. Last stop's going to be in that 417 or 416.50 area. I don't think we'll get down that far, but of course anything can happen. But we'll mark it off, just to have that level kind of, in the back of our mind. These daily, this new area here where we had to really break out of or break over to create that new daily uptrend, is sitting right around 425. We will mark that off as well, and that's sitting right basically halfway in between this gap. And what you can see and notice here is that we do have a lot of confluence with the 200 SMA and daily 20 and the daily 9. Maybe it's a little bit higher than that, but nice confluence here. If we do start to see an area, a pullback into this area, might be something that we would want to pay attention to. For a long trade. The other thing is here now, what has gone on in the trend sequence now that we've made that higher high from the daily, we would have to think that normal or at least healthy price action would be coming back and creating a daily lower, a daily higher low now. Now where that's going to be, again, we don't know for sure, but we could potentially even see a move back, and we were kind of alluding to this on the weekly chart, seeing some type of move back here, right? Maybe even, I don't know, maybe we even get into this area, but either way, then creating that inverted head and shoulders, right? Here. Whoops. Oh gosh. Okay, sorry. Okay, I don't know why that's drawing it like that, but I'm going to give it one more shot. Come on. Okay, that's better. Right. Ooh, okay, there we go. Something like this, and then that gives us the springboard. Now, again, I don't know if it comes down this far, if it just stops at that 425 area. That would not surprise me either. We've got the confluence with the moving averages, but that gives us the potential setup. Maybe we dip in that low, maybe we don't, but either way, that this gives us this potential setup that we come in this way, and that gives us the springboard to come back up. So we will watch to see how that plays out. But for me, the logical move in this potential uptrend would be putting in some type of a higher low and then continuing the sequence if in fact we are going to try to really reestablish a new weekly uptrend. But as far as it stands, that hasn't happened yet. Daily, okay, daily, we can say we have a bullish trend now on the daily, regardless of this poor structure. Okay, so now that we're done with that, let's get into some of our other charts. Let's look at our downtrend here, our trend and channel. Where are we sitting from this viewpoint? Well, things are looking definitely a bit more constructive here. If we zoom out, let me get back into here. Okay, so this was our major uptrend that we had been watching, right, on the daily chart, and we have now recaptured this uptrend, right? And today opened above the trend line here. So this view is definitely a bit more constructive for the bulls, as long as we are holding over this trend line. This daily candle, though, a little bit concerning with us pushing up, and not really seeing much of a move upwards, but that was to be expected. You know, we will watch out here for that potential consolidation. Maybe we hang out here and create some type of a high and tight bull flag. That might be the most bullish scenario, but you know, I really don't think that can happen, or that will happen. It certainly can happen because of these gaps here. But as long as we are still holding over this trend line, then we really do have a shot for an attempt at those weekly equal highs, and then potentially to make that that new weekly uptrend. But this candle for me is a little scary. It could turn into a type of an abandoned baby kind of setup. I'm not really too keen on these 2 or 3 candle setups, but it is something to watch out for, and could be setting up with a fake breakout above and then we peel back down, and then of course we come back up and potentially retest to see if we can actually break through once again. But let's watch. I really wouldn't be surprised if this ends up being a fake break above this trend line, but we shall see. Have to really keep more or less the bullish bias, even though I am swinging short. But from this view, you have to say, well, I can't really be technically short unless this trend starts to break back down, and this in fact then is a false breakout. So we'll see how price action starts to develop as the week continues. But let me actually, the other thing that I should do here is let's start to extend this trend line a little bit for our for ourselves, because certainly if we do start to sell back down lower, we do break this trend, the purple trend there, that we may just come back down, and end up retesting right here, and that also may provide to us a nice long setup if we break down, come back in here, trade, and then we head back up. So if something like this ended up happening, we could watch, and this might set us up for another short. Again, I'm not sure, but watch out as that evolves over this week or potentially next week. All right, let's go into our downtrend channels here, see what we can take away from that view. Oh, I clicked on the wrong one. Sorry. Okay, all right, we've broken over these channels here, so that really is showing us that new daily uptrend that we have created. Nothing really, we won't look at this one until we have some more price data, so we won't look at this anymore, as it right now it is not valid. So we'll see. The only thing I will say is that if we do pull back from here, we have price to here, and then we look for upside move like that. So that could be potentially in the, depending on when we get there, could be around that 430 area, around that whole number, maybe 428. But you can easily, obviously, just draw this trend line here from the daily for yourself, and just have it there for that potential retest and then push back up. So all right, let's go into some other charts really quickly. Let's go into, we used to start on this one all the time. Let's go back into this one to see where we are from this view. Okay, hanging out. All right, well, I think that this is kind of interesting, and actually we should extend this, right? This was from that that previous consolidation that we had moved into from spring. But let's activate this here, and we'll keep moving this along and just extending it ever so slightly. Okay, so it's a little constructive here that we have recaptured this trend line once again. Barely holding on to it, but you can see obviously this whole area here is a little bit tricky, and again, just kind of shows you why you don't really want to be initiating new money longs in this zone. That the risk to reward is just not very favorable, and really you can see the structural retest here that's kind of going on in the market, where we had this kind of M pattern, right? And then we are basically coming back and retesting that prior structure breakdown, right? So we're testing this structure breakdown, and we are testing this structure breakdown as well. So it's all in that same area right there, right? So this is just this is normal regardless of the fact that we made this move in like 2 or 3 sessions. That's not normal, but I think a lot of shorts really just, they all pile in here on the back test of the 200, and then they all got squeezed out, right? All right, so let's move right along here. Let's get into our day, no, not our day trading fibs. Let's get into our daily fibs. See where we can take away. I think we are well above that 38. Oh, okay, we didn't. All right, well, I thought we were well above it, but no, recapturing the, is this the weekly? Oh, no, this is the daily. Okay. We did recapture here. That 50%. So we'll still keep an eye on the 50% retracement if we do pull back. 431.50, anywhere in that area we can watch out for as well. Could be offering a potential long setup there. Very similar to the back test of the trend line that we just went over earlier. Coming back, retesting, and then making the move back up higher, right? So we'll watch that 50% retracement, but we start trading under that 431.50. Watch out. We'll see. We could see some selling really come into the market then. So, but the next major level, as you can see where we stopped, is going to be right up in that 438 area, right at that 38.2, right? All right, let's go back. Let's go into the weekly fib, because we did not go over that one on the weekly chart. Okay, and from this view, we're going to want to hold for 33.35, basically 30. We do have the daily, the weekly 9 and 20 sitting at 431.65 basically, and 430.81. So they haven't crossed over yet, but did they? I can see. Oh, they're trying. Yeah, it looks like they did. Starting to curl as well. But this is a much tighter support area. Well, I guess it's still about $2 down. But if we do pull back into anywhere in this area here, could set us up for some more potential longs. I personally would like a little bit further of a retracement, not just because I'm short, just because of that poor structure, more so because of that, because I don't really want those imbalances sitting out there. But we'll see. We'll watch. That's it's a little bit higher. That's probably about 15% of the retracement of the weekly range coming into these, the 9 and the 20, and the 23, the 23.6 here. But we'll also keep on that 50% range, like we said earlier, and that's going to be around that 425. But nice push here, a little weekly bullish momentum coming in. So from those not quite oversold scenario that we were watching. All right, let's keep it moving along here. I think that's everything I wanted to go over on the SPY chart for right now. So let's just take a quick look as what has developed in some of our other charts here. Let's look at the TNX. What can we take away from that? Because it obviously has seen a lot of downside movement there. We are hanging out though, right on the weekly. Let me go back to that really quickly. The weekly 9 catching a bid there. We kind of broke below, recaptured. Still very spicy here on our Momo. So without a doubt, still extended overall from the weekly view. But the daily certainly has cooled down some. But we are below the 9 and 20 here. And we are below the 57, the 47. So as long as we stay below that, okay, I think that is conducive for more upside. But let's see, we have maybe the potentiality of coming back up here, retesting, and then coming back down, right? So we could see something like this take place. But we could also maybe start to make some type of a case for some type of an inverted head and shoulders here as well. It looks like a smiley face. But it really doesn't mean much until we get over 47. So that's going to be the line in the sand for me. If we start to get over, then things will be looking a little bit more constructive. Huge gap down, obviously, but we're kind of just hanging out here at these lows around that 45s area. So we'll watch to see what this does. It could just do the same and kind of hang out and go sideways here for a little bit as it's trying to adjust to this new area that it's in currently. But main thing there will be watching that 57 or 47. I don't know why I keep saying that. That 47 for me. All right, let's just move it right along here. What do we got? Do we want to go over the dollar? Let's just take a quick peek, actually, because I have not looked at this chart. I didn't get to study many of the charts over the weekend because of the transition. Okay, dollar land. All right, we saw that break of 105.85, that 106, and once we did that, really saw the downside move accelerate here. And we are still hanging out now into this, just into basically where the breakout started back in, basically this consolidation area where the breakout then continued from here in the 105 area to basically 104.50. So as long as this area can hold up, we can see a potential, very similar as TNX, we can see a potential move up here, back up into back testing that 105.85 area like this, come back up, nice confluence there with the 9 and 20 as it stands, and then we see a move back down into the end of the year, maybe here, maybe we get a little bounce there, and then we come down. Something like this could be the way we see the dollar play out. And if this thesis does play out, this would give us that nice move into potentially the end of the year, as the dollar would, a lower dollar would ease up some pressure on the equity market. All right, let's keep it rolling along here, and let's look at some of our other data points that we want to view. Let's go into the VIX here, getting absolutely crushed over the last few sessions. And where are we sitting right now? Well, as it stands, we are under that 15 area, 1575. As long as we are under that, we can look for lower prices in the VIX. So if we do stay under this, we would be thinking that the market, that this would come back down and potentially come anywhere into that 13 to potentially 12 area right here. But if we do recapture basically 16 to 15.75, we could look for a move back up, more volatility coming to the market, more downside. But if we come back up here and retest that 19 area, this is where we could see it reject, and the market, this would cool off again, and the market would continue up higher. So let's watch how VIX does react over the next couple of days. But as it stands, things are looking good here from a bullish perspective. Not too much, nothing really, no real extreme reading on the put to call ratio. So just seeing a normal kind of little bounce there off of the 74, but nothing at extremes either way from this viewpoint. So all right, let's keep it moving along here and come into our new highs versus new lows. Anything we can take away from that? Well, let's take a look. It will be interesting here to see how these look after we have made such a huge move in the market. And what do you know? Looks like we are above the zero line. Hey, 11. We got a nice hot 11. So this looking a lot better. Just look at the move. Boom. Above 11. Does that convince me? No, it's not really that convincing. Let's see how this develops over the next few days. If we stay above zero or not. I don't think we will. If we were closed and we were up like at, 125, 150, something like that, a little bit more convincing, heck, even 75, a little bit more convincing for me. But as it stands, this certainly has improved. So that is good, but not totally convincing quite yet. And you can see really here on the S&P, on the SPY, how we're just coming right into this trend line here, where we could see some issues, right? So again, not really somewhere where you would want to be a fresh new long, in my opinion. All right, let's move it along here. Let's look at our let's go over the SPX 50R first and 200, see where we are from those viewpoints. Trying to go through this one a little bit quicker. Okay, here we are at that 50% line, almost there. Let's see how this develops. We really need to get over that 50% line for more upside, but great improvement there. Almost 45% of the stocks now in the S&P trading above their 50-period moving average. Let's see if we have a little pullback and then a continuation type of a situation, coming down maybe into that 35 area. And then we come back in here and then make a move up like this. Let's watch out for something like that in the market. Similarly to the SPX 200R, we could look for a potential move down into the 36. Right now it's trading at 39% of stocks trading over almost 40 over their 200. But let's watch out for a pullback into that 36%, 35%, and then maybe we get that move back up to the 50. So something like that, right? And that could give us a little inverted head and shoulders there on this. So that could be neat. All right, let's go into some of our VIX futures. And this one's a little bit interesting to me because of what we're seeing on the VVIX. And I will get over that here in a moment. But VIX futures obviously crushed as well. We're seeing a little bit of an uptick as this loads in them. So we'll look to see how, if this actually plays out. A little bit of an uptick. If this thing loads any day now. Internet seems to be going slow. Okay, but I've got the VVIX. Oh, here it goes. Okay, so negative 83, getting a little bit of a move up here in VIX futures. We shall see how this continues to react. We could come back up here, maybe into that 43 area, negative 50, and then continue back down. But as it stands, this is what you would want to see overall from the bullish perspective. This being down, even if this comes up a little bit, that's okay, as long as we're not, over that zero line. That's really where things can get really dangerous for the markets. Little bounce here in the 9-day versus the monthly. Keep an eye on that. See if it tries to make another little run for that zero line, and it may set up where we do come into the zero line and then make the move down like this. And if we see that, obviously, that is going to help bring the market up. The only thing is, though, the VVIX here getting crushed over the last couple of days, but you can see the amount that it was. Look at the size of the candles here. You can see how it's slowing down. That momentum here, while we were making new highs, you would think that the candles on the VVIX would be something like this or this size. We're not seeing that. We actually saw that momentum slow down right around in this 80 area. So as long as we hold on 80 here, I still think from here we could do something like this and kind of roll up. Now again, I don't know how high this is going to go, but it just comes up a little bit like that. Maybe we do, and I remember talking about this in a previous video, maybe we do get that retest after all of this prior breakdown, and then this would give us our downside retracements, and then we see the move back down, and that gives us that run maybe over and into the start of the end of this month and the start of the next month, and kind of for that quote-unquote Santa rally, right? So let's watch out for this scenario here on VVIX, but I think that it was interesting that you can really see the momentum of the sell slow down here. And this is also, a lot of the IV is going to get sucked out of calls or puts here after that huge move we saw to the upside, as now market tries to find new balance and gets, tries to trade in a smaller range as it looks for acceptance. So watch out for your IV on some of your, if anyone's swinging, just want to be careful here with the potential chop that we have coming up over the next few sessions, but we shall see. All right, let's get into some charts really quickly for a little bit more granular on the SPY and what some areas that I'll be watching coming into the next couple of days. But the first thing that I kind of wanted to point out was the thin structure that I was alluding to. Now, obviously, we saw the gaps on the daily chart, but let's let's get into a little bit different viewpoint with the VPA, and let me bring this up like that and see where we're at. Okay, here we go. And I can actually, I'll just take this. Oh, I had this on here. Okay. Let me just take these levels off. Well, first, actually, one thing I will mention, let's just look at this 424.70 area. Okay, let's just remember that level. So right now we're going to look at this is a 4-hour chart. Okay, and this is obviously the move that we had experienced to the upside. And you can see now when I'm talking about that poor structure, look here, look at this, right? There's nothing here. No shares have been transacted here, right? Look at this. Huge gaps here in the structure. And this, if we do start to see a sell, right, it's going to be very easy to chew through some of this downside, right? And market is going to want to have some shares transacted in the auction here and fill out this profile. So until these things, for me, I'm more on the side that these need to be worked out in the auction before we can continue our upward trajectory. So let's just keep an eye. We already saw that other level. I was just telling everyone, telling you guys to keep an eye out. It was pretty much smack dab in the middle of this lower volume node here. We didn't have one up this high, but 432. I think we were talking about that 431.50 earlier. So that does kind of line up here as well, and that was also last week at 1.4-hour point of control, but this week no shares traded in there in that area. So let's keep an eye at this thin structure. If we do start to see a sell, it's not that hard for us just to tear through some of this area. I don't know if we'll get down here. Had a down in the 420s, a little bit more price action, a little bit more volume here taking place in the auction, so we might not get down here, but this area is not out of the question is not out of the question in my opinion to be able to trade into over the next few sessions. So we'll see how that works out. Now, this is of course on the 4-hour chart, and I wanted to just throw it up on the hourly chart as well, so we can take a look from that view a little bit even more granular. And you can see here, look at this. Oh boy, I mean, there's just nothing in here. And this is all the way down to Wednesday's highs, right? and that's going to be around that 423 area, maybe 425 up to 426, anywhere in that zone. And then we had that gap up here, so this was in that 430 area here, 431. You can see not much volume traded here at all. The other thing that I wanted to point out, if we just take this up from a fib retracement from here, and we go to here, this area right here is pretty much right in between that 50% retracement, just under the 38.2 here. So we talk about earlier, we talking about a 50% retracement of the range or 25% retracement of the range. Well, we do have nice confluence for that lower volume node here, this volume imbalance, to be about a 50% retracement of last week's range. And just spitting total thesis here, but we trade in, do a 50% retracement, and then we get to come in and break out and make those new weekly highs. Maybe we get stuffed along the way, I'm not sure, but this would be the most kind of bullish scenario, or the second most bullish scenario. I think the first one would be obviously just a about a 25% retracement, coming down, maybe just to the 32, or just coming down to here and then trading up from there. Those are obviously the most bullish type of scenarios, but let's see how that works out. All right, I'm afraid to look at what's going on here with the okay, not too much. Wow. All right. Why is this like this? Okay, come on. Sorry guys, this thing's lagging up on me. Boom. Okay. So, what's going on today? And what are we going to be looking at? Some key areas. Okay. Keep it right about here. All right, so today really couldn't confirm over that 435, 60, 50 area. Couldn't confirm hold over that. We broke under that 435, which has been a real pain to break down out of. But once we did, we saw a nice sell down right into basically 434, 433, 36 area here. We could make a little argument for a potential inverted head and shoulders setting up here. On this lower time frame, but as long as we stay below 435.60, 435.50, still probably be a little bit short biased, unless we came back down to maybe test these equal lows once again. But either way, we could just be trading now, for the next couple of sessions, as I was alluding to, in something like this after that huge move. So let's watch out for this kind of price action over the next few sessions. But if we do start breaking really below today's swing lows around that 433.60 area, we'll look for certainly more downside. That's a little bit more of a favorable short than, say, shorting up here, but that's still a trade. But then we'll look to trade back down into 432 area, 432.40, somewhere in this range, and then under that, down to that 431 area, which we were talking about earlier on some of those bigger time frames. And we could look for a potential long trade idea in that area as well. But under that 433, we'll call it 50 to be fair. And I'll be probably looking obviously at shorts here. If I'm looking to short up in the 435.60 area, I'm looking at 435 puts personally, and then I'll be looking for trades back down into these equal lows again. But everything's going to really depend on whether, if we open up above 435 and internals are strong, probably we'll be looking a little bit more towards the upside. But if internals are weak, like today, we were hanging out here, but I noticed ADD was down negative 1,500 or something like that, negative 1,300, while I wasn't really looking to go long with a ADD like that, and breadth being slightly negative. I said, okay, let me focus a little bit more on the short today, even though, I was being very cautious for that choppy price action. Is what I was anticipating, but over the accepting over that 435.60, of course we've got 436, but over that, and we'll look for these swing highs, and then over that 436.30, 437 is going to be the next target, 438, 438.50, and then basically 439. So that's all I've got. I don't know if we'll get up that high. I don't know if we'll get down that low. Let's give us one more day of kind of price action to establish the potential weekly range, and then we'll go from there. But these are some areas that I will be watching, at least intraday, for potential trade setups. So, all right. Well, I hope this helped. I hope we have a great week. Let's stay focused. I really appreciate all my followers and supporters on here and on Twitter. Means a ton to me. If you've enjoyed the video or learned something, hit that like button. If you haven't already subscribed, a simple subscription would mean a lot to me, so I really appreciate that as well. Yeah, remember, trade your plan your trades. A prepared trader is a profitable trader. So let's stay focused, let's stay sharp, and have a great rest of the week. All right, have a good one and take care.